Hello, guys. Welcome back. It's Risky Trader here. Just getting everything all set up here. In case you guys didn't know, I have a podcast called Mindset of a Day Trader. It's a podcast that I'm very proud of. I've stopped working on it for a lot of reasons. I'm looking to get back and doing the podcast again. But I kind of wanted to go back to some of these episodes. I'm going to probably do this every so often. Go back to some of these episodes 4 years ago. We're going to start off with this first one called Averaging Down. This is season 2, and this was the premiere. It was episode number 1 for season 2. And it's called Averaging Down. So let's take a little listen to it, and I'll talk a little bit about it, and we'll see if any of my ideas have changed. I have not listened to these since I recorded them, so it's gonna be like kind of like almost a reaction too, because I really have no idea even what I've said in any of these. I really don't remember. So let's get right down to it. Hello, guys, and welcome back to Mindset of a Day Trader. Risky Trader here, and this is the beginning of season 2. Episode 1 is called Averaging Down, but as always, I am not a financial advisor. Anything you hear here should be a starting point for research, something that you discuss with your financial advisor if you shall decide to take that route. If, however, you decide not to, as always, it's suggested that you start in a simulator training before you put in real money. Okay, guys. First of all, I want to say thanks to everybody that's been, following this podcast. If you guys found any information, that's definitely true, guys. You definitely want to start in a simulator if you're not going to go the route of a financial advisor. I didn't do that. A lot of you guys may not. And I think that's totally fine in a sense because you can do whatever you want. But, you take a lot of risk by doing that. And so it's always recommended to talk to a financial advisor. Useful that I've said in season 1. I hope season 2 can be good to you guys as well. Check me out on my YouTube channel, Risky Trader, and check me out on Twitter as well at A Risky Trader. This episode is called Averaging Down. This is something I have a lot of experience with because this is exactly what I did to build my account from I already forgot what it was. You guys got to check the first episode of season 1. But it was like a $700 or $600 account, and I took it all the way up to like $10,000 in like 2.5 months. And a lot of it, I would say maybe even like 85 to 90% of that was me averaging down. What is averaging down? Averaging down, for anybody that may not know, is simply you buying a stock and then you rebuying it again at a lower price, therefore bringing your average trade price down. So for example, if you buy some, let's say 1,000 shares at $3.50, and then you don't sell them, the stock ends up going down all the way down to $3, and then you buy another 1,000 shares for $3. That means that right now, at the moment, you will be holding 2,000 shares at a price of $3.25. So instead of let's say you just kept the original 1,000 shares at $3.50 and it was at $3, it will have to go back up all the way up to 50 cents in order for you to break even. But in this case, because you average down, you have a much bigger position. Now you have 2,000 shares, but you have it at $3.25. So instead of you automatically being down, 50 cents a share of 1,000 shares, you're basically down 25 cents a share of 2,000 shares. So essentially, I guess you could say it's kind of almost the same thing, but you are just bringing your average down. People do this if they truly believe that the stock will go in their favor. I was doing a lot of dip buys, and okay, guys, so I want to talk a little bit about that. So for one, I did take a $700 account, and I turned it in about two months and a half or so. I did turn that into like almost 11,000. So it was about over 1,500% gain in like 2 months. A lot of it was averaging down. So I just explained a little bit what averaging down is. Also saying a lot of people averaging down right now because they really believe that the stock's going to go up. Look, averaging down, it's just it's an error. You didn't get the correct price and you refuse to be wrong. It's a psychological error. It's a trading error. More likely than not, from what my experience and from what I've seen, you're more than likely to lose continuing to be doing that kind of averaging down. Because essentially you're just continuing to accumulate shares. If it has a big run up, yeah, you're in the money pretty good. But if it goes down, like you're just down so much. And it gets to the point where averaging down just starts to not make any sense. And you're just losing and losing. It happens so many times. But in that little run, and that happened, I believe, when the coronavirus pandemic bottomed. Stocks just were going up, and it was like 2 months of it. Just trying to remember, I think it was like March. It was like middle of March or April or something, and by June it kind of started to be a little bit more normal. And it used to just be you took the trade, the breakout of the pre-market highs, and you were in the money. You were gonna win like 30%, 15%, and if it went down a little bit, you just average down, and then soon enough it'll go back up, and you can easily make 5-10% so easily out of whatever your average price was. And because you accumulated shares, essentially, you made good money. It wasn't necessarily a strategy that I was really trying to do. It was just something that I was doing. And it just, at that time, it just worked very flawlessly. But I would say that doesn't really work that much right now. And sometimes I will average down like a couple times. So what would I say? Do I think averaging down is a good idea? It depends. Because I had good experience, like I said. But I also, when I lost the 10,000 in 2 days, it was also due to averaging down. Yes, guys. I did lose this in 2 days. So it took me 2 months or so to build it up, and in 2 days I lost it, and it was because of averaging down. So there you go. It had to do with averaging down as well. I would average down to the point where I couldn't anymore, and it was just getting too stupid, and I would just lose big time. So I would say averaging down, if done right, if done correctly, it's very good. And if you believe in the play, it's very good. This is different. This is kind of like, when people are swing trading and they want to, if done right, if done correctly, I don't even know if that's really true today. Look, averaging down essentially just means that your entry... Look, you as a trader will never enter if you thought there could be a better entry lower. You enter because your strategy tells you that you feel this is a great opportunity for you to make money. Essentially, I'm not saying you're predicting the bottom, but you are telling yourself this is a good entry to get in on. And when the stock goes down, the stock is literally telling you, well, there was a better entry down here. So you average down. Not because you believe in the trade, not because you believe in the stock, not because, you're good at averaging down. You average down essentially because you don't want to lose and you don't want to be wrong. And most traders do it for that reason. So no, I don't think it could be done right for most traders. There are some people that are a little bit more disciplined, and certainly they might do very well averaging down. But as of right now, today, 2025, March 18, 2025 to be precise, I will say no. Scale in other words, they're not going to go in initially with their full position. They're going to get a starter. Let's say a person's full size position is like 10,000 shares. They may start with 1,000 shares, and then they're thinking about swing trading this for a while. So when the price goes a little bit lower, whether it be that same day or whether it be the next day, they'll scale in another 1,000 shares. Essentially, they're averaging down, but they're also scaling their order. They're not really at a full position yet. So when I was averaging down, I was averaging in full positions, and then when I will average down again, I will average another full position. So okay, so I was onto something back then. Look, these episodes are still golden in my opinion. You got to go check them out. But I think in our reality, it's true. Like if you're using averaging down as a method to scale in to your order, essentially you're not full position. That's totally fine. That's totally fine. Maybe you even tell yourself, I think this could be a good entry. Maybe it's a bottom, but I'm only going to get in maybe 25% share size here because if it goes down, I would like to scale in more. That's cool. But like I said, I was doing it full position, and that's when it could become extremely, extremely dangerous. My starter was my full position, in other words. So my starter was a full position, but so was my average down. Was a full position as well. So I was putting in a lot of money, and when it worked out, which it did for a long time during that period, the 2.5 month period, it was working out a lot. I was making a lot of money, but it only took 2 days to lose it all, and I lost a lot of money there too. So, averaging down, like I said in the end of season 1, risk management was, the number one reason why people lose money. Everything basically all the episodes had to do with risk management in one way or another. But averaging down is, you have to decide if this is something that you want to do. And, I would say that averaging down comes with a lot of risk. Because at the end of the day, each and every single one of you is in control of your own life, your own decisions, and your trading. That's why I put disclaimer. We all put disclaimers. None of us are financial advisors. But don't blame any of us for getting, I try to be as transparent and as honest that 90% of people that trade lose. I lost many a times, and I'm losing even right now. I actually have a little challenge going on right now. It's the 300 to 3,000 challenge, and right now I'm currently sitting at $88 on that. First of all, I didn't even start with 300. I started with an account that was like 286, and I'm down to like $88 right now. And it's like I think it's like day number 28. Let me see. I'm going to even put the banner up for the day so you guys can kind of see. Let me take this off so you guys can see. Day 28, guys. Literally, I'm on day 28 right now, and I'm at $88. Okay? So, trading is extremely hard, even for somebody like me that's been doing it for a long time. I've built up accounts. I've lost accounts. It could happen at any moment, really. Sometimes, the market's ever so changing, and sometimes your strategy doesn't work, and you don't have another one for that new cycle. You're going to be in trouble, okay? You need to be able to tell the difference. I can tell the difference now, but a new person coming in may not, and that's why it's 90% of people will just end up losing, and they're not going to be able to continue, okay? I'm very lucky to be in the position that I'm in. I don't have kids, so I don't have that responsibility like other people do. Some people will try trading, they'll lose, and then they'll go around and say trading is for suckers. And essentially, it could be, you know, but for some people, it's not. And therefore, it doesn't make it 100% true. So it's extremely, extremely risky, though. The odds are against you. So you got to know that before you even get in. Because if you get it wrong, you're going to lose big. You can lose big. But if you get it right, you win big. So it should only be done if you truly believe that the stock that you're doing this is, has a potential to curl back up in your favor. But I was buying dips, and I knew that when buying a dip, I may not necessarily predict the bottom. And I wasn't really trying to hit the bottom. What I was trying to do is trying to hit it in the right moment, trying to get in the right moment where I thought a curl, sometimes, even when the stock is going down, there's still some candles that kind of shoot up a bit before going back down again. So I was just trying to catch that little pop, those little pops. And I knew that, by doing that dip strategy, I knew that I may not necessarily get the bottom, and I wasn't aiming for that. But I also knew that maybe I wasn't going to catch it right at the moment where it was going to pop. So averaging down for me was like a no-brainer. And at the time when I had such a small position, because, basically I was going in with such a small amount of money, I had a small account, it didn't really matter, because my losses weren't that big anyway. My losses were like $30 when I first started, and my wins were like $30 when I first started. So, losing $60 or $90 wasn't like, it was actually like really bad now that I think about it for such a small account that I had. But I just started going on a big streak, and it was such a big streak, and I was just kept on winning. I didn't have a risk management, but I didn't have to, and I didn't really need to do any other strategy because I was winning big on this. Another part of the I also built it up by taking the break of the pre-market high, but we'll talk about that some other time. But there you go. Averaging down, like I said, is a hit or miss. So hit or miss. At times it could work out, and at times it probably won't. I would say that for me, it's like a 50-50. For me, during that time, I felt it was a 50-50. Actually, to be honest, and I want to be honest with you guys, if I'm really being honest, averaging down for me has not really worked out too well. I probably, there you go, at a losing rate, I'm probably like at 80 or maybe even 90% losing rate. That's what it is, even to this day. Whenever I decided to average down, averaging down has not been good to me. Has not, with the exception of those 2.5 months. I had a long streak. In those 2 months, it was all right of just averaging down and it working out for me. But ever since then, it has never worked out again, and I don't average down anymore. So I would just say that I really try not to down in anymore these days, guys. I really do try not to anymore these days. A new trader to do it? No, I don't. Personally, I don't. I don't think that. Like, unless you're scaling in, which is completely different. If you're a person that scales in, you get a starter, and then you scale in maybe by averaging down, that's fine. I think that's completely different. But if you're a person like me that just goes in on full position all at once, I don't think averaging down is something that you guys should be thinking about. I just don't think that it makes much sense. So that's all I have to say about averaging down. Hope you guys got a little something off of that. I want to say though, however, it was really good to me during that time, so it was kind of made it difficult for me to talk about it because I kind of just remember it being good, but at the same time it was also bad too. I'll be back next week, guys. Next Friday I'll probably come back and I'll do. That's pretty much the end of the episode, guys. But no, I thought I like what I said. It was good during a period of time when the market was just red hot. You almost didn't need, and I certainly did at that moment, didn't need a risk management system. I was building it up so well. But once that came down and I didn't realize, and I didn't have a risk management system, it was all gone. And the rest of that year was just a psychological year where I just could never get a rhythm. I think I was almost even traumatized by it all. I do not recommend averaging down. Scaling in into a position is totally different, and that's totally fine. In a sense, you are averaging down, but you're actually more than just scaling in on purpose. I know there's going to be traders out there. They might be good at averaging down, and maybe they're always kind of like teaching that method to their traders. But if you're bumping into my video, I'm gonna say I don't think that that's good. So if you go talk to a financial advisor, you know, everything that you hear from me in this channel, I hope it's at least just a starting point for research of kind of like topics that you can talk about with your financial advisor. I think your financial advisor should, if you want to be a day trader, for example, I feel like your licensed financial advisor should be a successful day trader as well, because these are topics that you want to bring up and discuss with them. I don't know if they're going to show you and teach you guys how to trade. Maybe they will, I don't know. But I'm just saying, I think at the end of the day, you want to be successful and you want to do things properly. And I didn't follow that path, and I didn't really reach a high level of success and still have not. So you follow a different path, it may work for you guys. I have no idea. This, like I said, there's never a guarantee, and always it's gonna be this, and that's because that's just how it is, and there's no way around it, guys. It's always gonna be this way. People are always gonna be giving you this disclaimer until you find somebody that's licensed and won't, and then you can go ahead and learn from them. Training is difficult, it's hard. Averaging down with just one episode on season 2. I have plenty of more here. Chat room, alert rooms, social media. I'm gonna probably do this, just kind of do it like a reaction. But if you guys want to jump the gun and go ahead and this is it right here. Mindset of a Day Trader podcast. You can find it on Spotify. It used to be Anchor, but Anchor, I'm not sure if it still exists or not. But I'm gonna try to see if I can start posting more episodes. I don't know personally if I'm gonna be able to have these anymore in a podcast type of setting. I used to use Anchor, so I need to figure that out. How I can go about recording a new episode and for it to actually pop up here and show up as a new episode on the actual podcast. If not, I'm gonna probably have to switch the podcast over to YouTube. And that's going to be a lot of work, but if I have to do it, I have to do it. I want to talk a little bit about the challenge too. I have not posted videos of the challenge only because I've been lazy. My hope was that after every day I just post it up on the but it doesn't matter. I have all days recorded, I think, and eventually they're going to be in the playlist. Every single episode is going to be in the playlist, whether the account, whether the challenge fails or not. I'll put it there. I'm going to be transparent regardless of anything. Right now, like I said, I'm down to like $88 on the challenge, which, I trade other accounts. That's just the challenge account. So do I trade the same on all my accounts? Not really, to be honest. I don't. It's kind of same setups and this and that, but it's a little bit, and you'll see if you start trading on your own. When you're trading with more money, you try to be a little bit more careful. When you have a small account like this, I try to be aggressive, and I'm trying to build it as fast as I can. And essentially, when it goes wrong, I'm kind of like destroying it fast too. But I have faith and belief that I'm gonna be able to build it up soon enough, over 100, and we'll go from there, take it over, and I just want to get over the 300 mark, and just be smooth sailing from there. And just build it up real fast. I think I told myself about 2 months. So I told myself I think like 40 days. So we're barely on 28 days. So I still haven't got to 40 days yet. So I'm hoping that I can make something happen there. But I appreciate the support, guys. Of course, subscribe to the channel if you haven't. Follow the podcast. The podcast, it was something I was extremely proud of. For personal reasons, I stopped doing it. And I actually took a little bit of a break from trading for personal reasons as well. This is a psychological game. That's why I call the mindset of a day trader. You need to have the right mindset, because if you don't, your chances of success go extremely high, in my opinion. Like, there's a lot of the things that can distract you, lack of sleep, all kinds of things. And I talk about a lot of these things here in Mindset of a Day Trader, so please check that out. Follow it. I don't know what you can do in the podcast world. At least follow my channel here. I'm also on TikTok, guys. Risky Trader. Follow me on TikTok as well. I do the best I can. Like, there's a lot of people you guys can follow. And if you already follow a lot of people, maybe I'll just be one more guy, but I do the best I can. I don't know about anybody else. I speak for myself only. Try to be transparent and honest and keep it real with you guys. It's already tough as it is. For me to be trying to lie and everything, that'd be just ridiculous. I appreciate all the support. I really do. Like I said, I never really made too much money. Anchor was supposedly paying me. If you guys notice, in the middle of the episode, it kind of like stayed quiet. It was just like the music playing. I used to play an Anchor ad there, and I think the most I generated was like $6 off of all the episodes and all the different plays and views that it got. I only made like $6. And I don't make anything off of YouTube or TikTok. I've never made any money off of me posting information on social media. And I don't know if I ever will. It doesn't really matter. I try to put out a good product if I can. Try to make things look nice for you guys. And hopefully it's nice enough. And like I said, I appreciate all the support. And I'll catch you guys on the next one.